From Daily Forex, this is Chris taking a look at the indices in the United States. We've got the S&P 500 E-mini forming a flat candlestick. It did rally initially, it broke down, and then it kind of bounced back. But we're just kind of killing time here at the 200-day EMA like we do tend to do at times. You can see here and here and here, which means we're probably going to get a move. At this point, I suspect it's probably lower, but if we break 3,000, we clear the previous gap, which we're fighting with now. The 200-day EMA, the 61.8, and the large round number. At that point, there's nothing to keep us from going higher, I think, eventually to the highs, which is ridiculous. But this is all about Federal Reserve liquidity into the market. We're in the middle of earnings season. I'd expect more of this in the short term. But if we break down below 2,800, we could go to 2,640. NASDAQ 100 continues to defy gravity. We do have a little bit of a gap just above, so we may try to fill that gap. I anticipate we sell off. Now, the thing about the NASDAQ 100 that a lot of people don't pay attention to is 33% or like 32%, something like that, of the index is like Facebook, Netflix, Alphabet, Tesla's like a big part of it. So it's all the cult stocks. It's all the same stocks that everybody in Wall Street buys. So that's why the NASDAQ 100 typically does better than the S&P 500 in an uptrend. Everybody buys these stocks, so it's kind of a no-brainer. Now, this gap here is the only thing stopping us from going to all-time highs. I think perhaps we might get a buying opportunity closer to 9,000. Wouldn't necessarily want to buy it here. But these are companies that Wall Street will give up on last. So if this rolls over, you can almost be assured that the S&P 500 is breaking down.